the banking system is collapsing, and there are going to be hundreds, if not thousands, of banks disappear.
This is Kaiser Johnson with Liberty in Finance, and this is the Miles Franklin Weekly Special for May 2nd through May 9th, 2023, while supplies last. In our first special in more than 6 weeks, we are excited to feature the 2023 Australian Silver Kangaroo at just $4.85 over spot. The 2023 Silver Kangaroo from Australia are renowned for their 4/9 fine purity as well as their recognizability and design. Like many other coins, they come 25 to a tube. However, unlike others, the Australian Monster Box is just 250 coins, making it the most affordable Monster Box available, especially with a premium of just $4.85 over spot per ounce. And finally, Silver Kangaroos are IRA eligible. And if you'd like to learn more about a precious metals IRA, an IRA holding assets in a private depository rather than a bank or brokerage, call us, and we'll be happy to help you in that process. To order this special or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance, and back with us today, one of our regulars on this show now, Bob Moriarty, from 321gold.com, 321energy.com. He is a Marine, naval aviator, and financial author. Bob, thank you so much for joining us today.
Well, it's certainly good to talk to you.
Well, it's definitely good to talk to you. I did want to discuss the ongoing banking crisis where we saw last time we had you on, we were talking about First Republic that was taken over largely by JP Morgan, FDIC taking on some of the losses there, only about $13 billion there. Jamie Dimon came out on Monday saying, this part of the crisis is over. Lo and behold, on Thursday, I believe it was, we saw just a crashing in a lot of these regional bank stocks, especially PacWest is one of the main ones there. And there was a halting of trading. What is going on right now in a lot of these regional banks?
Well, here's what's interesting. You didn't mention what happened on Friday with PacWest.
Well, the stocks actually rebounded, which was kind of surprising. So it, kind of leaving a lot of people confused here over the weekend.
Well, it shouldn't be. Okay, the danger is there. The banking system is collapsing, and there are going to be hundreds, if not thousands, of banks disappear. But the key is this is not one of those things that's so easy. You just go over to the money machine, pull a handle, and dollar bills flow out. On Friday, PacWest was up 100%. This is the most dangerous time to invest I've seen in my lifetime.
Now, can you kind of, walk us through what is happening right now in these regional banks as well? Because it seems like some of these bigger banks, Silicon Valley Bank, Signature Bank, and First Republic already went under, but now we're seeing still pretty big banks, but definitely on the smaller side, PacWest, Western Alliance. Some people are saying some other banks as well are having issues. What specifically is the issue here with PacWest and these other banks?
Okay, the issue is exactly the same for every bank, big or small. The Federal Reserve lowered interest rates to near zero, which was way too low. It was totally insane. And nobody in the 30,000 people working at the Fed pointed out that when they raised rates, a lot of people were going to get hurt. The 30-year Treasury got up to something like 165 or 168 points, and then it collapsed 29%. So that was considered the safest place to put money, and it turned out to be one of the most dangerous places to put money. Banks have several different assets. They have the loans that they've made, and unfortunately, a lot of the regional banks have made commercial loans, and they're defaulting like crazy. So they're getting hit pretty hard. But banks also hold bonds of other banks in the theory that we're all at the same boat. But that's a flawed theory, because when the boat sinks, everybody goes down. So they've got loans, they've got bonds of other banks, and then they've got government treasuries. And all of them have gone down. All of them are dangerous. And it's every bank in the world is in the same position. Now, I do follow the comments that people make. Somebody's made a comment a couple of times. If the European banks are in worse shape than the American banks, how come nobody's gone broke in Europe? And they totally missed Credit Suisse going under. The European banks are going to collapse suddenly because they are literally in worse shape than American banks. But we're at peak insanity and we're at peak panic. Have you followed the interest rate on 30-day treasuries bills and 60-day treasury bills? It's the biggest spread in history. And what it means is that we're willing to trust the U.S. government for 30 days, but we're not willing to trust the U.S. government for 60 days. We are in an extremely precarious position, and the government's doing nothing that's making anything better, and lots of things that are making it worse. Now, the central issue goes back to the amount of debt, and it goes back to the banks being casinos instead of banks. In 1933, when Roosevelt took office, literally the first thing he did is stop the use of gold in the United States and declare a bank holiday and shut down every bank in the U.S. except one in Nevada. He went to Congress and he said, okay, we've got to stop the banks from being casinos. So Congress passed the Glass-Steagall Act, which separated banks from investment banks away from lending banks. And that was in place until 1977 under the Clinton administration, where they overturned it. As soon as they did that, banks realized they were in a win-win situation. Any investments that they made that they profited from, they got to keep the benefit. Any investment that they made that they lost money, the taxpayers would pick up the losses. So that's not a good deal for the taxpayers. Somebody in government should be saying we need to stop the banks from being casinos, and nobody is. Until they address the real issue, the problem is going to continue to grow and get worse.
Now, as it stands right now, if you add up how big these banks are that went under, the size of the banks is actually combined bigger than all the banks that collapsed in 2008. So it seems like this, at least right now, is definitely a worse crisis than we saw in 2008.
Well, absolutely. And we're just at the start of the avalanche. I've commented before, and I'm pretty sure I've told you, this is going to be worse in 2008, and it could be worse in 1929.
Now, you mentioned how this is also a crisis around the world. Is that because all the central banks are doing the same thing, raising rates at the same time? What is the cause of, why is it not just a problem in the U.S.?
Okay, that's a really good question. Actually, the European banks are in worse shape than the American banks because they went to negative interest rates. Now, I studied economics in 1973 and 1974. I was going to school in New York. And if I had walked into class and said, someday they're going to have negative interest rates, the professor would have given me an F and thrown me out of the course. Nobody in economics can come up with any rational reason for having negative interest rates. Interest is what you pay someone for them taking the risk of you defaulting. Interest rates have to be positive, but for political reasons, the EU lowered interest rates to negative. So the difference between the negative interest rates and what they've raised the interest rates to from a percentage point of view of increase is actually higher than it is in the United States. And of course, the EU was literally forcing banks to buy government bonds, buy EU bonds, and buy government bonds, which is totally insane. In England last year, as of last fall, the highest rated government bonds were down 53% in 1 year. Now, that not only affects the banks, it affects insurance companies, it affects hedge funds, and certainly it affects corporations that own those bonds. The world is in an extremely precarious position. The boat is sinking, and we need to start addressing the real problem instead of the apparent problem.
And it seems like the American people are in some way waking up. There was actually a Gallup poll, and almost 50%, 48% of Americans were moderately to very concerned about their money in the bank. Your perspective on that?
Well, that's exactly why the regional banks are going to go under. They are exceptionally concerned, and we know that because of the spread between the 30-day T-bills and the 60-day T-bills. And unfortunately, they're absolutely correct to be concerned. If there was ever a time to panic, this would be a great time to panic.
It seems like, I know we just had Bill Holter on, and it seems like what he said was that really that statistic from Gallup shows that this could be the mother of all bank runs, because it just takes a lack of confidence from the public for this to really get started.
That's not strictly true. It got started for real economic reasons. However, yes, it is going to be the mother of all bank runs. Banks lend long and borrow short. So no matter how good a shape a bank is in, when the public loses confidence in that bank, they could suffer a bank run. So there is going to be bank runs across the board. And it's not all because of poor economics. A lot of it's because of how people feel. And they're just flooding money market funds with money because they're nervous, and they should be nervous.
And I know we've discussed this in previous weeks, but it doesn't seem like money market funds or these alternatives would necessarily be less risky than just holding and running the bank.
Well, no, they are less risky. Okay. I'm not saying government notes are safe, but government notes are safer than bonds of Silicon Valley, for example. Okay. They're all paper assets, and there's a relative degree of safety. And a 30-day T-bill should be the safest form of what is considered money now. It's not money, it's paper. But the public is rushing towards safety, and they don't know where to go. And literally, Janet Yellen and Powell are making the situation worse because they're saying, oh, no, there's nothing to worry about. Everything's just fine. We've got the safest banking system in the world. Well, the safest banking system in the world may still be an extremely dangerous banking system. It is. We have $300 trillion worth of debt. We need to be talking about how we write off that debt. And until we do, it's going to continue. And it is. I'm going to pinch that phrase from Bill Holter. That's a great phrase.
The mother of all bank runs?
Yeah, it's absolutely.
No, we have a viewer's question actually about the T-bill rates. They ask, why did the 30-day T-bill rate go sky high today? And what does that mean for the stability of the economy?
The real key is not them pouring money into 30-day bills. The real key is the difference between the 30-day rate and the 60-day rate. They not only are pouring money into 30-day T-bills, they don't want to put money into the 60-day. So it means we're at peak nervousness, and that's going to continue to get worse. I haven't heard anything this weekend about the 4 or 5 banks that have plummeted this week, but I suspect they're going to go under next week.
We have another viewer's question here. We talked about the risk of treasury bonds, which it seems like that's probably slightly better than bank accounts here. But what is your perspective on credit union deposits, money, and money market accounts?
Okay. I'm going to talk about relative risk. From a relative point of view, T-bills are safest, and then T-notes, and then T-bonds. And that has to do with duration. They're all government money. The credit unions are safer than the banks, but they're not as safe as money market funds. Money market funds are probably only second to 30-day T-bills in terms of safety, but it's a relative safety. And one of the things that we haven't talked about yet is, how could you buy insurance on a house if the house was burning down? And the answer is, it's very simple. You buy gold. The banking system is in a state of failure. It's going to continue to get worse, and you could still buy an insurance policy in the way of buying gold. You are not investing in gold. You are investing in an insurance policy, and we don't care what our car insurance costs. We don't care what our house insurance costs, because we don't want to collect. However, this is a good time to own physical gold and silver.
This viewer asks about precious metals. He asks, if you have 6 months of fiat currency expenses, essentially just 6 months to pay expenses there in the bank, is there ever a time to go all in on precious metals or other hard assets?
No. And the reason for that is, let's presume you live in a $400,000 apartment. Would you put $4 million worth of insurance on the apartment?
No.
Because it wouldn't make any sense. They're only going to pay you $400,000. Okay. Likewise, with physical gold and silver, it's an insurance policy, but it's like insuring your life for $1 trillion. It just doesn't make sense mathematically. It's worth. Now, I think he inferred, should he keep 6 months' expenses in the bank? And I'm going to pass on that in a way, because at some point, enough banks are going to collapse that the FDIC is not going to be able to cover the deposits, whether they're insured or not. And when that happens, a lot of money in banks is just going to disappear. Literally, I would keep 6 months cash under the mattress, and I wouldn't tell my wife.
I think this is kind of a conditional statement, but if we did see a circumstance where the FDIC ran out of funds and couldn't make good on the insurance there, even for that $250,000, at that point it would be really moot point if they could or couldn't, because if they couldn't, there would be two options: just not hand over the money to depositors who had insured deposits, or just print the money. But at that point, the currency, the dollars, wouldn't be worth anything at that point because of the high inflation.
That's exactly right. the Fed has mousetrapped itself. If they pay off all the depositors, we go into hyperinflation. If they don't pay off the depositors, the money just disappears, both of which are bad situations. And we may have one and then the other. I fear the Fed continuing to pay off the oligarchs, because the oligarchs in Silicon Valley had $13.5 billion at risk. It was uninsured among 10 billionaires, and the Fed paid it all off. And that's a situation where clearly those guys knew what the rules were, knew what the agreement was, knew they were taking risk. And the Fed turned around and said, we don't want you to lose money. We want the taxpayers to make money or lose money. And I think that's pretty foolish.
Yeah, that really shows that that the government can change the rules at any time. The FDIC can change the rules at any time. So maybe on the flip side, counting on that insurance might not be the best idea.
Absolutely correct. If anybody believes that insurance is going to get paid, there is going to come a time where it either isn't paid, or if it is paid, you're going to be paid in monopoly money, neither of which is a good choice.
Now, you mentioned how it's good probably not to go all in on gold and silver, because why have so much insurance that it doesn't make sense there? Debbie is wanting to know, is there a calculation of how much gold and silver one should have to survive what is coming? So yeah, is there any specific, metric that you would use to kind of calculate how much gold and silver someone should have, provided, considering that neither of us can give financial advice here?
Okay, what we can do is we can talk about history. Austria and Germany had hyperinflation in 1922 and 1923, and a U.S. $1 bill, would pay for a meal for 20 people. You could buy a nice apartment in Berlin for U.S. $5 gold piece, or British pound, which is about a quarter of an ounce. The answer is, if you have a reasonable amount, and a reasonable amount is going to vary from person to person, in physical gold and silver, you're going to be okay, even though everybody, no matter how well prepared, is going to get hurt in some way. Okay, you just want to make sure you don't get destroyed. When the banks collapsed in the U.S. in 1933, 25% of Americans lost their entire life savings. That would be a tragedy.
That's definitely why we're here, to kind of share with our viewers, the possibilities of what could happen in the future so that they can be aware and prepared here. We do have a question about one of those possibilities. This is kind of maybe a far out question, but it's important to consider, I think. Paul asks, what is the possibility of the new U.S. Treasury, Federal Reserve, central bank digital currency being backed by gold and silver when they are released in July? Well, we have to be backed by something to stay competitive with the BRICS, since some people are saying that the BRICS new reserve currency will be backed by commodities or gold.
Okay, the probability of that happening would be zero. Okay, the reason for this, the whole purpose of the central bank digital currency is to give the government total control over your money. Literally, when you walk into a bank and you deposit $100, who does that $100 belong to?
The bank.
Of course. Okay, you've just given your money away. And what central bank digital currency represents is, we want you to give all your money to us. We're going to have total control of your money. And if we don't like you buying guns, okay, we're going to stop that. And if we don't like you saying nasty things about us, we're going to stop that. And if you've been eating meat at the store, we're going to stop that. It gives you 100%, it gives the government 100% control over your life. If anyone thinks that governments want honest money, the probability is zero. Okay. Governments are run by sociopaths whose only interest is to steal and to control people's lives. Okay. We're going to go back to a gold standard, not because of anybody in government wanting to. We're going to go back to a gold standard because that's the only way to run an economy in the future. Because you're absolutely correct. The BRICS are going to come up with the resource-based financial system. And something happened this week that was very interesting. Europeans are buying oil now, diesel and gasoline and LNG. Where did it come from? Russia. You're going to say, wait a minute, Bob, you lost your ever-loving mind. No, I haven't lost my mind. There are sanctions against Russia on the part of the EU, and the EU cannot buy Russian oil directly. But what they can do is buy oil from India or Morocco or China. They used to be Russian. Okay, it's so insane. I mean, people should go back. I wrote a piece. Every piece that I've ever written is still on the web, and you can go to the archives and you can read it and say, he really got that right. You say, he's just as dumb as I thought he was. On March 1st of last year, I wrote an article. I said the EU has just committed economic suicide, because the sanctions make no sense whatsoever for the EU, okay? So what the EU did, it said, okay, we're going to honor the sanctions in theory, but if India happens to be selling a bunch of oil at a good price to us, we're going to buy it. Well, it's Russian oil. The Russians ship to India, and India ship to the EU. The problem is that it increased the price by about 50%. So the inflation rate in Europe is just absolutely out of sight. But that creates a problem for both the Russians and the Indians, because Russia exports far more to India than India exports to Russia. So the agreement was, okay, what we're going to do is we're going to accept local currencies. If the Indians buy something from Russia, they could pay in rupees, what is rubles. If the Russians buy something from India, they could pay in their currency. Rupees is the Indian currency. Rubles is the Russian currency. But that creates a problem because Russia sells so much more to India than India sells to Russia. So this week they came up and said, oh, by the way, we're not going to do that because it doesn't make economic sense. And it doesn't make economic sense because certainly India would be tempted to run the printing presses 24/7. They're going to go to gold because gold makes sense and they could do it very easily. And you don't even have to have physical gold, okay, but as an accounting system, as a store of value, gold is perfectly suitable. And I think that's what's going to do it. And once they do that, that's going to make both Russia and India the wealthiest countries in the world. Eventually, the United States and the EU will be forced into something similar.
Well, thank you so much for the answer to that. I know it's kind of a long answer there, but I think very, very informative for our viewers here. And I'm sure Paul very much appreciates that. So thank you so much, Bob. Before we let you go, I did have one question. Again, this is probably the most important of the whole interview. I know last time you promised us a dog story, so here's a viewer asking, well, it is out with the chickens and in with the dogs. Bob, tell us a happy story.
I was married to the most interesting person I have ever met in my entire life. And we were married for 30 years, and every day was an adventure. And unfortunately, she smoked and she had sky-high blood pressure. and she almost made it to her 75th birthday, but didn't quite make it. That was 3.5 years ago. And because it was so much fun being married to her, I got very lonely as a result. And I don't know who it was, but somebody said, you should get a dog. And of course, I'm living in the south of France now. So if I'm going to buy a dog, it's going to be a French dog. And I was thinking puppy. And somebody said, well, I've got a better alternative. I know someone who has health problems, and he has a 10-year-old border collie. And the border collie needs a nice home. So I met the border collie, and the border collie just ignored me. But I took the border collie home, and after a week or two, we got along famously. And the dog adores me, and I adore the dog. But there's a problem. And it has to do with communications, because the dog speaks French, and I, of course, speak English. Now, he gets along fine, and most of what I say he understands right away. One of the communications issue was when I told him, don't eat the chickens. Because what he heard was, eat the chickens. He missed the don't. So we've had some discussions about that. But I take him on walks on 2 or 3 times a day, and he does what dogs do. Now, because I've never had a pet in my entire life, I'm not sure what the rules are. So I'm walking the dog around the neighborhood, and the dog's doing what dogs do. And one day we passed a house, and there was a cardboard box with a sign on it that said, I don't like your dog's shit, written in English. And I read it and I thought, I think they're talking about facts. But because he's a smart dog, but he's not that smart, he speaks and understands French, and he understands English, but he's not smart enough to read English. And I thought that was a really dumb comment. I mean, how am I going to let facts know what the rules are? But I do, he's not up here right now. My dog has separation anxiety. And when I leave the house, he literally will bark or he will whine. And that was a lot like when I was married to Barbara. When I go on a trip now, Fax whines because he misses me. When I came home from a trip with Barbara, she would cry.
Oh. Well, thank you so much, Bob, for all your time today. I guess we'll see how this banking crisis plays out in the next week. But Bob, we really appreciate your time. Any last thoughts before we let you go? And where can our viewers find you online? We'll also include in the description of this video a link to your Amazon author page where they can find all your books. 321 Gold, 321 Energy. And I would highly encourage people to go to Amazon and take a look at the books. I'm not the greatest writer that I've ever seen, but I could be the most versatile. And I've got everything from 2-hour fiction to very serious financial books that you can read in 2 hours, or a history of mining, or a history of me being in the Marine Corps and going to Vietnam, or a history of flying small planes all over the world. I can write about a variety of subjects, and people will actually be quite surprised. I may not be a great writer, but I'm a very readable writer, and I think that's important. Fantastic. Once again, Bob, thank you so much for your time, and God bless.
Good deal. Thank you. It's always good.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.